Welcome everybody to UROC 365 webinar series to grow your business. Today's guest speaker is going to be Ms. Ranaa Namdar, and the interview is going to be hosted by Mr. Alex Ahanchin from United Realty of Canada, the General Manager. I also like to thank today Mr. Pat Jabdan, Broker of Record of the United Realty of Canada, and Dr. Alex Ahanchin, General Manager, for graciously supporting and sponsoring this webinar series that we have been doing now since March. Actually, we have been doing it for straight 2 months, and we continue to do these seminars and webinars in the future to connect with our prospective clients and buyers, and also our mortgage professionals and all the other professionals in the financial associations. A little bit about the housekeeping. If you have any questions, please register yourself at uroc365.com and click on one of those buttons, which is the black, the red, or the blue button. And if you have any questions related to real estate or pre-construction or just realtors in general, please register yourself. We also have some really good webinar series that we have recorded, and one of the best-selling one is Learn How to Build Your Client Database. This is one of our best-selling webinars, so register online and get access to it. There's another upcoming webinar that we are going to be doing very soon is how to generate leads using videos and newsletters. So that is coming up very soon. And also talk to Alex and Pat regarding the guaranteed income program for realtors. So definitely contact them and figure out how that program works. Also, we'd like to thank one of our authors, Mr. Douglas Gray, author of the book, What the Financial Institutions Are Not Telling You. Register for this book. This is an excellent book that talks about debt consolidation, saving money, and how to pay off your mortgage fast. And the whole idea is, we are going to be doing webinars also on this topic of teaching people how they can start saving, how they can invest, and how they can, learn to accumulate money so that they can pay off their mortgage or buy other investment assets. I'd like to thank also Ms. Ranaa Namdar for attending this webinar series today. And Ms. Ranaa has been in the Canadian real estate, in the Canadian banks, working with Canadian banks for the last 7 years. And she's been working with Bank of Montreal for the last 3 years as a mortgage specialist. So Alex, I'm going to give this microphone to you so you can start the recording and the interview, please.
Okay, thank you, Jerry. First of all, thank you from all attendants, especially Helen, Ranaa, and Ida. I saw Ida Murad too. Second time that we are so happy that you guys in our webinar. Last time we have a very, very professional and very good webinar. And this is why we have a few questions, both from my side and also from our agent side regarding the appraisal and also from mortgage and those relief program that I will ask then from Ranaa. First of all, from Helen, that doing the appraisal. Regarding, that in this time we have a crisis of COVID-19, that this is not the normal situation. In the normal situation, by the appraisal coming, go to the house and do appraisal, and everything become normal. But in this situation, first of all, Helen, I want to know that how is the appraisal doing? Is it possible doing also by virtual to not physically, according to the law of government, because this is the physical distance, and as far as the people go, not contact to physical that we could do in the appraisal?
So hopefully you can hear me. Oh, you can. Okay, I've unmuted. So thank you for the question. Thanks for allowing us to join. So yes, the banks now, due to COVID-19, the banks have universally what's now called the modified full appraisal process. BMO was the first bank, actually, I believe one of the first ones, if not the first, to accept and this modified full appraisal. So what is this process? Is essentially, it is a process where the appraiser, believe it or not, 97% of the process is the same, but that 3% change, or now what's called modified full appraisal, is that visit, okay? Believe it or not, it's 3% only difference, because the work in the past, before COVID and hopefully after again, was the work they would get assigned. They would do the research, they would be searching their programs, and then after they would do the visit component only made up a small percentage. But it is of course important because they're reviewing the property, they're taking pictures, but now they're needing the eyes of either the realtor or the keyhole, the occupant of the property, okay? So now they need to engage either the realtor or again occupant of the property to take pictures, defined pictures that they can then provide to the appraiser so they can do their analysis. Okay, so they're being the eyes of the for the appraiser, and they will have basically provide all of that information to them. I do have a note that I can send to Ranaa to forward to you guys, or I can forward to Jerry, that basically outlines the virtual tours and the possibilities and all of the different tools that they can use. So to answer your question on that regard, yes, they can offer virtual tours as well. They do, when they're doing these appointments for the modified full appraisal, they are going to the property. They are just not going in. They will be in their car, safe distance. They will maybe get out of the car to take a photo of the property, the street, but interior and the backyard, it will either be a video tour with photos that are supplied, and both, if you will, by the key holder or occupant, if that's making sense. And the reason I'm saying key holder is it will change. It could be a tenant, in which case then, you know, or it could be vacant property, so it has to be a realtor, right? The actual homeowner. So hopefully that answers your questions. Yeah.
Okay, that's good. Helen, is there any delay in the process? Because as I mentioned, this is not the normal situation. Is it something like a delay in process regarding the COVID-19 for the appraisal?
So this is a great question. In terms of the turnaround time, I actually believe that there is an opportunity for it to be the same, if not better. And I know that sounds strange, but I will tell you truthfully, right now, the control is because of the photos. Right now, if Ranaa or like a specialist at BMO requires, she can, before or at the same time that the appraisal is being ordered, she can already be coordinating because of the new COVID, right, rules and the modified appraisal. She can already be organizing all the photos or communicate that the photos need to be taken by that client or the occupant before they're even contacted by the appraiser for that for the appointment or for them to ask. Okay? When I say appointment, I mean the appointment still exists for the full because they're going to the property at that time to take photos. Okay, but if there's no reason why they cannot have or be already prepared. Actual fact, the process can be the same or even better. The delays would only occur if the client or the occupant is not prepared and not taking those photos and providing them in a timely manner, or the realtors, for example, in a timely manner to the appraiser. So I would think that would be on a smaller scale, and in actual fact, it'd be the same, if not better, turnaround time.
According to your experience, what do you think that according to something I name it as physical distance appraisal, comparing to normal appraisal, is there any effect on the appraisal prices? Because, you know, majority of the people likes to have a good appraisal, high appraisal, you know. Therefore, what do you think that there is something like misevaluation? I'm talking about misevaluation of the property during this COVID-19, according to not the physically you cannot see the property.
So as far as, thank you for the question. So as far as what I like to say it now, like many people are concerned, maybe I can paraphrase with the COVID factor. Okay, so now we're in this COVID, the appraiser can't go in. Oh my goodness, you know, are the values going to then plummet or go lower? Well, to answer the questions, you know, yes, we're in a pandemic, of course. But as far as the property value goes, this was pre-COVID and during and then after. it is all about the comparable sales. So yes, there's so a property now that, yes, it's going to be different now, the process slightly, as I mentioned, but keep in mind, again, I'm going to go back to this, 97% of the process is the same. 3% has changed. That what's changed is that the appraiser cannot go inside the house. However, from the beautiful photos that are provided by like Realtor or MLS or the softwares that the appraisers are using, okay, they have access to that. They also have access, of course, to Geo Warehouse, like different products that they can make sure and see and verify data. Even in the case of where it's a tenanted property, I know there's workarounds where maybe if there's safety reasons they don't want to go in. It's really about, has always been about the comparable sales. So yes, we're in a COVID factor. So yes, some would say, okay, it's a pandemic. When there is floods or fire that have occurred, let's say in the Western Canada, and different things are happening, there's something that is the appraisers already have, or the appraisal world has enacted, which is called extraordinary assumptions. Okay, so this is a situation, the pandemic, when extraordinary assumptions are being enacted. So all of the appraisals for BMO, we're now going to say that there's a COVID or extraordinary assumptions. Appraisal was done during COVID-19, etc. However, still remains same. They're putting that wording in there. So it means the same process in terms of the comparable sales that are there, the analysis, the work that has been done. Okay. What I can say in terms of values, for example, and this you can comment on, I believe as well. You are the experts in the real estate. Okay, that there's obviously going to be less. There is been a 20-year estate sales has been going up for 20 years. Now we're in a situation where first time in 20 years, it's like, oh, this is something big, major. I guess I shouldn't say first time, second time, 2006 to 8, okay, of course, as well. But in terms of a pandemic, nothing like this has happened. So right now, there's less listings. So some people might be not putting on, right? So how is this then affecting value? Of course, it's obvious. You can answer this too, or you can comment, is that there's less than comparables, right? Because then those things are usually driving the price. And then if there's less of them, then there's less comparables for the appraiser to do the work, right? And if this is, I mean, I will then pivot or ask to you is, wouldn't you agree on that?
That's right. You talk about the comparables. For how many period you refer to the comparable? For example, you know that the April Market Watch of Toronto Real Estate Board said that as an average, 7.8% we have, down the price, and also 67% less listing, less selling. Therefore, I'm sure that is affect on appraiser for sure.
Of course.
How you can be able to manage for the people actually when they want to buy?
So this is a great question. So the beauty of or the detailed analysis that the appraisals and the banks have in place, the system is a very good one. So you can rest assured, like I said, they already had built in the extraordinary assumptions. Every lender already has a policy. So BMO has a great policy already where the appraisers know as soon as they're taking that appraisal order that they have to do, okay? They already know all of the guidelines from BMO that they have to, and the lenders. They know immediately what has to be done. 90-day comparables is the norm, okay, is normal. However, it's already built in with BMO, and most lenders, all of, I would say, is that they also have built in, just different details, but it would outline that when it's not available for 90-day comparable sales that are not good enough, they are able to go back 6 months, year, but they have to provide explanation and commentary and details, okay? And adjustments, of course, because last year, going back 6 months, year, yes, it's not COVID, it's also different time. And, it goes against, if you think about, it should be a current recent sale, right? So 90 days is the goal, but even without COVID, or I would argue to say, for example, cottage properties, remote properties that are not having turnover, or even downtown, certain popular areas where people are not moving, this has always been the way, where they then make adjustments. They can, with the bank's guidelines and with their own, go back in time and make adjustments. Okay, it's more important for them to stay in the area versus if they can go back in time and make the necessary market adjustments.
Okay, that's good. Thank you so much. The next question I have regarding the realtors. You are as a professional appraiser. What do you expect from realtors to help appraiser to do logic appraise of the property?
So this is a great question, and I want to clarify. I'm not an appraiser. I've been in the industry for 10 years. I'm in the process of getting my appraisal license, but I am not one. I worked closely with them for 10 years, however. But to clarify, but working closely with them and having the luxury of working in this industry and working very close with my team and educating them. I'm educating myself, so I don't have those letters and behind. However, I will. But at this point, in terms of what realtors can do, really is allow for that time for those conditions to maybe extend, allow those time frames, because when there is the possibility or the need where Ranaa has to get an appraisal done, right? And then if the condition time is so tight, right? And then it causes then this kind of rush situation, right? And we don't want to have to, it can be facilitated, of course, but in some areas, or especially with an analysis that's done, you want them to do a good job. So I would say as a realtors, that they can extend those, or not extend them, but look at the situation and say, okay, you know what, we can add an extra day or two, or make it a little bit more flexible. Sometimes those times are very tight. So I can think that can be one thing. Second thing I think from that, I would say from the realtors is really to, in this situation, maybe plant a little seed, with that client. If they maybe, I'd like to say there was a bidding war, or they paid a little more for that house, because they really liked it. Maybe plant a seed and say to them, this house, you're gonna get this house is an extra, you got it, that's great. But for the financing, the bank's appraisal is gonna happen now. And keep in mind, in terms of when I pass you to your mortgage, professional Ranaa, keep in mind that the bank doesn't take into account that you had to overbid for this, right? Or not even overbid, however the wording you're going to say. I just want to, you can choose those words because you're the professionals, but basically to put a little seed in there, or like a little droplet of knowledge, so that they're not so surprised, because really, the purchase price of a house doesn't mean the appraisal value is going to come in same, and it does not take into effect that this bidding, extra bidding war happened. It's about what the market or the comparables are like, right? So if that house they put for $670, I had one today in the Cottage region, Kawarthas, vacation property, $670. If value came in at $450, it's a very small cottage, very remote. Lots of land. The land is not considered, first of all, okay? So when they sell the house or when they bought it, they're paying for that. But the bank is not, is taking into account the property, not the land, right? So these type of things, as you as the professional, these amazing sessions you're doing, the educating, I have no doubt from just meeting you briefly and last week and now, that you guys already are amazing firm that are doing these types of things that you haven't. So that's great. So maybe just continue on that, that path by helping your mortgage professional, to that expectation, because this is your mutual client, right? You're passing together, and then you want to get referral and get family and friends, right? Everybody working together. So you want this experience for them to understand that concept, if it's making sense, that yes, it's going to be coming, your appraisal value is not taking into consideration land, and you don't have to be a very expert about it, just dropping those seeds, so that when Ranaa is doing the work, right, when the mortgage professional is doing that, how come I'm getting this value? When in actual fact, when it happened in that situation I mentioned, they came to the conclusion this was a good appraisal, right? The value, it's a small house, small cottage, 1,800 square foot, It has lots of land, but that property was a little one, older, 1900s, like very old, was never completely redone. You know, 1.5 floor, like very tiny, right? Or not tiny, but you know, a modest size. But this land was absolutely amazing. Okay, so they paid for that, but the property itself is appraised as this value, right? So the more education of if the realtor kind of already told them that, then the mortgage broker, and then client will be less inclined to be kind of shocked of, oh, you know, I had to come up with this money, you know.
Yeah, completely right. This happened actually. This happened for actually a few of my colleagues in other brokerage. Actually, I saw that happen. Anyway, it was very, very professional and knowledgeable answer that you gave it to me. Thank you so much. Actually, I don't know, after that, maybe another attendants have a question, but right now I want to ask a few questions from Ranaa and then from Aida Mura. For Ranaa, I have a few questions regarding a relief program of BMO.
Yes.
Ranaa, thank you so much, Helen. Ranaa, may please tell me what is the relief programs for realtors, especially for realtors, because we are working for realtors. If you tell me which type of relief program or incentive program done by BMO for realtors.
Okay, that's a good question. Well, I'm thinking how I should respond to realtors. Well, we are giving one free mortgage to realtors. How about that? For worth $1 million. Well, well, realtors are first before there are realtors. I hope that majority of the realtors that I work with, they are our BMO clients. This is what I'm hoping for. And so just like any other clients that we have at BMO, we give the priority to assist in any way that we can in this pandemic difficult situation. So anything that that is applicable and we discussed last time as our relief program is also applicable to realtors. I would love to say that there is anything extra and other than that that is particularly addressing realtors, but I don't have anything special, but I can certainly ask Ida to take this further and see, because this is something I think we never even thought of, just to offer anything particularly for realtors. But nevertheless, if let's brainstorm on this. If there is anything in particular you think that BMO can offer, which would come to assist to realtors, by all means, absolutely. Because our intention was to send out as many emails as possible and as many information as possible about the market situation, about the how is this affecting the market, real estate market, how is this affecting the purchasing power of individual, how is this affecting the affordability of the individuals and everything, so realtors can get a proper insight as to how they should plant the seeds for the next few months for their business. But nevertheless, if there's anything that we can do and you have that in mind, by all means, we will take it further, and Ida can raise it up and see if we can come up with anything for that.
For sure.
Perhaps Ida wants to respond, but I'm not sure if she's on mute or not.
For sure, we have a few questions from Ida, for sure. But, you know, Ranaa, actually, on one side, realtor considered as self-employed. On the other side, considered as employee. You know, as a general for self-employed, what is the relief programs for the, you know, for the self-employed employment people?
Self-employed or not employed, if you're talking about the payments, it's the same thing. If you have a mortgage, you can defer it for 6 months. If there's a credit card payment, again, it can be deferred or stopped. If anything like, it's regardless of the job that you're having, right? We don't need you to prove if you can afford it or not, because that is something assessed at the not at the branch, not our own side. You submit the request and they will assess it. But any relief program that we offer is applicable to you totally, unless there is something that Ida knows and I'm not aware. She can answer.
I will ask a few questions from Ida. Ida, welcome, Ida. Can you hear me, Ida?
Hi. Thank you for having me.
Thank you so much.
Good.
Ida, first of all, I have a question. Those people that defer mortgage for 6 months, for sure they should pay the something. There
Okay,
are some noises. Actually, my question is that is there any effect on their credit? For example, say that
No.
okay, this guy was not can be able to pay the mortgage, therefore it affects on the credit for next time that want to apply for the next mortgage. It is affect or not?
okay. So the relief program was intended to help people that can't pay their mortgage, right? That's what the intent was. The program wasn't intended for the elimination of payment, or it wasn't a gift, and it's not a grant. So if you defer so by you deferring the payment for 6 months, they will be charging you interest. That interest that you're not paying, they will add it to the end of your mortgage.
Right.
So this preserves your credit on the credit bureau, so it will not affect your credit. If you don't defer, you don't go into a branch and use the deferral program, what will end up happening is your credit bureau will be, if you need it's free in this world, we never communicated as a bank that it was free, but people are under the assumption they say, oh, the bank is great, they're giving us relief for 6 months. I said, no, they have to pay interest regardless. So if you really need it, use it. If you don't need it, don't use it. What I do recommend is that you defer the payment, and the income, even if you have a regular income, they don't verify whether you're working or not. But if you have high credit card debt, this is a good way of using the interest rate you have on your mortgage at a low rate and pay off your high credit card debt. So if you have a balance on your credit card for $10,000 and you're deferring 6 payments and you're saving yourself $10,000 in interest in payments, put it on your credit card, because you're paying 30 basis points there. You're paying 30% versus 4 to 5% on a mortgage. So you got to be smart. That's why you have to leverage the bank, because they're not going to force you to do anything unless it's good for you. Hope that answers that.
Yeah, oh yeah. Very, very, very good answer. So very professional answer, actually. And I'm so clear right now. By the way, we have, I think, another 4 minutes. I don't know, Jerry, if you have any audience or
Alex, I have
any question?
Yeah, I have a question.
Right.
Yeah. Do you have, what is the BMO program for self-employed in general?
Okay, I read that. I read your question,
Yeah.
so I can perhaps, I believe you want to know the requirements basically as to what we need to see for self-employed, right?
Right.
Okay, because I'll give you a rough idea, because there is a list of documentation that I would need in for self-employed. But still, there are regular stuff like, if it depends if it's a sole proprietor or partnership, it's we would need the 2 years of their T1 general, their statement of business or professional activities, the 2 years of their notice to read their financial statements, their financial statement accompanied by a review of engagement report, and also their personal tax return, their NOI for 2 years. So if it's the company, or if it's a corporation, it's again, we need to see the documentations for 2 years of the history of their T1 general, they notice to read their financial statements, and the audited financial statement for the business that they have. But these are the documentations that we need. But if you're asking about the program that we have for self-employed, we do have, again, for self-employed, we have one that if they are in business for less than 5 years and more than 2 years, and they declared some income and as the business income, There's no particular amount for that. As long as it makes sense for the type of the business they're doing it, we would consider it when as an application. But generally, because we need 2 years of all of those, they have to be prepared to provide. I have to answer very briefly because I thought we have 45 minutes, but apparently it's only 30. But still, I can later on provide you with the list and the programs. But we do offer it and we have it.
Thank you so much. The last, I have a few questions, but the last, because we don't have that much time. So if self-employed, they're not making any money right now, but they have a track record that they made money in the past 2 years, what happens to them? They're not making.
As I said, if they've been in the business for more than 2 years and less than 5, will be the amount they made and they declared on their tax return has to make sense for the nature of the business. We don't care how much it is.
Okay, thank you so much.
Yeah,
thank you so much. You have less than 1 minute, Jerry.
So what I'd like to do is one more final question for you, Rana, is that I want to know if it is a first-time home buyer, what is the maximum loan to value that you will offer to the first-time home buyers?
Okay, that's nothing to do with being a first-time home buyer or not. Okay, you can be a first-time home buyer, but your income and your down payment can be so high that we can offer like up to 80%, 90%. It depends. But if anybody, first-time home buyer or not, putting less than 20%, it has to be insured. And if it's 5%, we can still, with CMHC approval or Genworth, we can guarantee 95% should they qualify and meet all other eligibility criteria, basically.
Okay, great. Yes. Thank you very much.
Actually, there is a last question, if I have the time, from Mahsa. Yeah. That he asked regarding that those people that want to sell their house right now and buy can use the deferral program for the mortgage right now or not.
I wouldn't know that. Sorry, Ida, I guess I need your
help. What is the question? Sorry, what was the question?
That the new buyer, right now buy the house, buy the property, they want right away to deferral the mortgage.
Right away? I don't.
Yeah, they could do that. Absolutely.
Okay.
So the deferral program, say for example, the customer bought their house, closed on April the 1st, and they can't pay, they qualify for 6 months deferral payment. Okay. Even though they haven't even made a payment. It's guaranteed.
On the new purchase, you mean?
Yeah, on the new purchase.
Okay. Sorry. Yeah,
okay. Excuse me, I just wanted.
The question that you answered was perfect. For me, was perfect. But again, for a second time, we'll ask this question again, that for those people that buy a new home, defer the mortgage for 6 months, same as regular house, for example. You said that they can be able to do that, defer the mortgage anyway.
Yes.
Yeah. But in which cases they cannot be able to defer the mortgage? Is there any cases that
they have? Yep, there's stipulations. They have to be up to date. They cannot be in arrears currently. So if they're behind, they don't qualify. They have to be up to date in order to qualify.
But default in the mortgage payment in, for example, last year or, for example, 2 years ago?
No. As long as they're up to date, they're good to go.
Oh, okay. The next question that I have, is there any regulation and rule changes by COVID-19 affect on mortgage or not?
Absolutely. Absolutely.
What is those changes?
We can't publicize the changes, but we're looking at each deal case by case. It's not, we have to verify income. Ranaa, you can help me on this one. The rules just changed yesterday. We have to verify income within 30 days to make sure that they have an active payroll. Whereas days.
Okay.
So they've tightened that. But as for approvals, you have to remember the bank has to understand the customer and the line of business that they're in. Right now, as an example, the food industry, like the restaurants, that type of business right now is the most volatile.
That's right.
So if you have people in the hospitality business, we are struggling for approvals Like it's a little bit harder because we don't know what the future is going to hold, if this is going to be the new norm with social distancing.
Right.
Your business, my business, what's changed is we can't go close to each other. So we're doing a virtual home tours. We're doing this for virtual presentations. We're taking applications over the phone. Our customers are able to go to the office and don't have to go to the office. They could sign remotely. So as long as we can still see a future for the customer's income stream, applications will get approved. The ones that are being scrutinized right now are the ones we don't know how drastically it's going to affect their livelihood. We don't know. Like, we don't know, say, for example, you're a business owner and you own a restaurant. We don't know what the projections are going to be because we don't know what the impact has been yet. So yes, things have tightened up a little, but we are looking at the whole picture. This morning, or actually yesterday morning, dentist office closed because of COVID. Secretary applied for a mortgage. We approved her because we know that dentist office is only short term. They're going to go back and see patients. She's going to have a job. So we looked at it that way, that, you know, this is a short term setback, and we were able to approve her. So each case, as long as you develop a good story and verifiable information, there's a chance it will get approved.
You know, I think as I see the situation of economy as a global economy, I'm talking about as global economy. You know, we have a rate of unemployment at least what the bank of actually Central Bank of the world said that we expected that we have 25% at least after Corona crisis unemployment. I'm sure that all the banks make a rule and regulation, and for sure, I'm sure that the mortgage is not easier the same as before. It's become more tighter in the future.
Absolutely. That's what I just tried to explain. It's all case by case. It's industry. And we have to make sure that the customer is able to afford the payment. We will not approve applications if we don't have a solid business case. I'm not going to lie to you. We have changed, but we are in business. We are understanding the industry. We're understanding where the economy is going, and we make our decisions based on facts. Right. So it is changing. I'm not going to lie to you. It is changing. But like you said, there's 25% of the workforce that's unemployed. You can't lend money to the people that are unemployed. It's impossible. Yeah. Well, that's true. We could use equity lending. There's all sorts of things you can do. And that's why technically it's case by case. Look at the asset mix, look at the credit score. There's all sorts of components that go into approving an application.
According to your experience, I'm sure that you are so experienced. What do you think? Do you think that after this corona crisis, I don't know when, the people come and cannot afford the mortgage, and they coming for the cover of sale something their property? Do you think something like happen?
Well, think about it. I don't think we're going to go to that extreme. Personally, this is my personal opinion. With businesses starting to open up next week, right? So you got to think. 2 weeks ago, we were talking about total lockdown. No one's going anywhere. So the first phase of the pandemic was basically fear. Second phase is like getting into the trenches, trying to figure out where we're going to land. And now we're opening up our lives again. So by us opening up our lives again, you know, you got to remember the Canadian and US have the best companies in the world. It's going to be a rapid recovery. I don't think it's going to be a slowed down economy. When we start to open up, I think we're going to open up quick. Just to say, like on Monday this week, they were talking about nurseries, just as an example. It was only car service. People had to drop the flowers to the cars. Well, guess what? In 1 week, they're open now. On Monday, the nurseries are open. So I could see this, as long as we don't get a setback, I think we'll be up and running by the fall. That's my prediction. I'm not an economist, but just based on what I'm hearing on the news and how we've gone through the first and the third phase, I think we're in a recovery mode right now. And it's going to be slow and very smart ways of introducing us back into the market. I'm hoping I'm answering your question because I'm not an economist. I don't know. As for people can't affording their mortgages, that happens with or without COVID. People do have financial issues, and sometimes people do go power of sale. I'm not sure how it's going to impact, but the 6-month relief will definitely help because you don't have to make payments for 6 months. So it's one or the other. Like, I mean, I don't know 100% what's going to happen.
You know, according to knowledge that I have from this virus, and I studied too much regarding this virus because it's my professionality. You know, the psychological effect of the disease is much important than the economical situation. You know, right now, majority of the countries, actually, the government said that you can open the business, but the people psychologically afraid to go, to get together, come to the restaurant, sit together. You know, this is the mind of psychology of the disease, and the fearness that the people have regarding this disease makes, I think, again, business for more than at least 3-4 months, more than 3-4 months, you know, coming back to the normal. I don't think so, not easy, according to the psychological mindset of the people. Because right now, if, for example, I invited you to come to my home, everything is okay, a little bit, you are not the same as either the same as 3 months ago, 2 months ago.
Oh, absolutely.
You are so afraid, you have a fear that, okay, you know that if I go to this house, come to this party, come to this invitation, what's happened? Maybe they have the COVID positive and they don't have any symptom, and I got from them. This is that the people a little bit have fearness, psychological fearness of the disease.
I can totally, I can see it.
It is that I am so worry about that situation, that point. The people cannot come together again, the same as before.
Well, because we're used to the human touch, right? Think about it.
Yeah.
The way we like to be with people together. Now that we've done the social distancing, it's affecting us differently. I mean, I'm not a psychologist. I'm just knowing what I'm feeling myself personally. I'm used to being in the market, going out and seeing people for business socially. Now I've had to change the way I do that. So is that going to be the new norm? We don't know where we're going to land. All I know is they've announced that they're starting to open up businesses. To me, it's a very positive thing. But all I know is when I go out into the market now, and I'm going to make sure that I instill some of the social distancing behaviors so that, you know, I protect myself and my family. And if we all sort of take a step back and look at what we're doing today and sort of put that into play when we normalize, I think, you know, it's something that's going to be different for all of us to adapt to. I think there's a question.
Okay. I don't know, Jerry, do you have any, Jerry, can you hear me? Jerry, I think...
No, I can hear you.
Yeah, can you hear me? Jerry,
Yes.
Is there any question from other attendants?
Yeah, I think there were some questions from the previous session. One of the question was, does BMO do reverse mortgages?
Yes, not us personally. We work with CHIP, and they work with BMO to do reverse mortgages. So those are mortgages where payments aren't made for the duration of the mortgage and are paid out on death, basically.
And what's the loan to value?
You know something, I'm not the expert. I work with a company that does that for me.
Okay.
I think they go right up to the max. I'm not sure. I do not know what the loan to value is. I don't know what the rates are. I don't get involved in that because I don't represent that. We work with them in partnership, just like we do with Spectrum, our broker channel. that if we can't place a mortgage, we can use Spectrum for alternative mortgage solutions. And reverse mortgages is basically the same thing. It's called CHIP reverse mortgage.
Yeah, but if I may add, because we work closely with those partners at CHIP reverse mortgages, if there is anything, we can always connect you and we can refer you or your clients to them, and then they will take it from there.
Okay, that's very good. Thank you very much. I also have another question that I know that you answered in the previous session, but I just want to re-clarify again. So let's say in this case, as an example, it's a first-time home buyer. They're buying the house for the very first time. Can they defer the mortgage at the time of buying for 6 months?
No. No. So I thought your question was, they've taken possession of their home and they want to defer. Yes, you can do that. But if they've made a purchase and it's closing today, they can't defer for 6 months.
Yeah, that's what I first thought.
Whatever's on that original contract, it has to close.
Okay. It has to close
They have to go
first.
back to the realtors
Yeah.
and renegotiate.
Yeah, they have to take the
closing date.
position, not at the time of not at the time of the application. When we are expecting the closing to happen in the next few weeks or months or so, we cannot do that.
Right, but they can close right now at the time of closing. After the closing is done, then they can go back and ask for a deferral. Is that
They can
correct?
come back and
Correct.
ask for the extension, yes.
That's right.
And how long does it take for the deferral program to get approved?
I don't do that myself personally. There's an online application that needs to be completed, and I'm not sure at this point. It's done by our customer contact center. If I could share the information, the online form, I can't see it tops to get it done.
Yeah, but whoever is doing this, the way it's done is that you can always log into your BMO online banking, and there is a message center, and there's a form that can be filled out on the message center on BMO online banking.
Right.
So you fill that form, you submit it in, it goes straight to the contact center, and someone will call you or email you and they get back to you. But you have to understand the volume that they are dealing with is pretty high. So it may not be immediate, but eventually they do. But I know for a fact, because of a few clients that I have, I know that they are pretty efficient and gets back to you within 48 hours or so.
Okay, perfect, awesome. I have another question, maybe both Ida and Ranaa can respond, and this is related to commercial mortgages. What is the maximum commercial mortgage amount you approve right now in this COVID-19 situation?
Sorry, what was it again? Commercial?
For commercial, during this COVID-19, what is the maximum loan to value ratio?
Oh, I don't do commercials. I only solely do residential, but actually, this is a great opportunity that I can take and say that we can always bring my commercial colleague into the call and talk about commercial as well. But I can certainly ask, and then I can email Mr. Ahanshin back.
Yes, that'll be great. That'll be great.
Okay, thank you.
So in your opinion right now, Ida and Ranaa, in the last 2 months that we have been sitting at home and you guys are working from home, what type of purchases have you seen? Like condos, townhouses, or do you see any difference, or there is what's your take on this?
I think Ida is better to answer that because she sees the purchases of whole team, whereas I can just talk about my own clientele.
Okay.
So so we've had a couple of builder sites closed, so the closings are happening. As for new purchases, slower than what it was before. Maybe my business has dropped about 25%, but we've gained it in refinances, switch mortgages. So I'm trending positively. I haven't fallen behind in volume, but it's a diversified book of business that I'm booking today. So to say that purchases are down, absolutely. Refinances, switch mortgages are up. Like I said as well, we had a builder site close recently, so we've had an increase in closings because those were deals that were approved 3 years ago. Condos finally got booked and occupancy and registration happened, and we were able to close them. But to say that our purchases are up, they're not.
Because the inventory is very low.
Mm-hmm.
So just to give you an idea, is working from home has been an experience, able to connect with more people virtually than I have when I was on the road. And I've noticed that a lot of brokerages are up and about doing things virtually just like I am, staying in tune with people through whatever social platform, and just communicating and us connecting like we are today with you. I'm doing that with several realtor offices, and I'm noticing that it's been increasing the attendance. I think people are, I really do think that the economy is going to turn for the better, and I'm hoping that this starts to regularize very soon. Being in recovery mode coming out of a COVID is very, very crucial. Timing is perfect for us because we're still in the spring summer market, and we're hoping that the inventory increases and the sales start going up for you and closings increase for us.
Yep, that's right.
All right.
I don't have any more
other
questions. I don't have any more questions.
Okay,
Alex.
because now we have only 3 minutes because I have to join another presentation at 5. So if there is anything else, and we can just answer in the next few minutes.
No, I think, Alex, I don't have anything else. So I think we can wrap up definitely.
Yeah, actually,
The question for Chief Reverse, you can take it to me and I will connect you with the guy in Chief Reverse if needed.
Sure.
Okay.
Sure. That's again, I want to thank you so much from Aida, you and Helen, and all BMO people, professional people that works in BMO. Always they support us. Thank you so much from BMO.
Absolute pleasure. Thank
and,
you.
Hopefully
Thank you so much for having us.
No problem. We are so happy that you have here, and you're also professional, Ranaa, you and Helen. You're so professional, and right now I am so clear from.
Excellent.
I'm so changed.
Okay.
From you right now.
Thank you very much.
Always here to help.
Okay. Thank you. Bye bye.
Thank you so much.